Hi, what's up? Welcome to the channel. If you're new here, don't forget to show some love by subscribing. On this video, we're going to look at a simple trading strategy that everybody can use, okay? So if you're new into trading and you're confused, all you need to do is do exactly what I'm going to show you. The first thing you have to do is understand your market direction. That's trend. And this is what we see. You see, price is creating higher highs and higher lows. Simple, right? So once you see that price is creating higher highs and higher lows, you know that, okay, this is an uptrend. That's the first thing. The second thing is you mark out all the key levels. I have a complete video on how to mark out key levels, but it's simple. Key levels are just round numbers. You see, I have marked out 1.32,000 flat, 1.33,000 flat, 1.34,000, 1.35,000, 1.36,000. So the distance between this level to this level is 100 pips. So the gap, the distance between two key levels is 100 pips. Okay, so as you can see, this is the daily time frame we are looking at. So it's not like a baby time frame like 2 minutes, 5 minutes, 10 minutes. No, this is the daily to have the overall market bias. Okay, now once you've understood the market trend direction, what do? You mark out your mid levels. Okay, you mark out your mid levels. So let me just mark out all the mid levels I have here. So a mid level is the gap between two key levels. So you can see 1.34,500 is a mid level. You can see 1.35 is a mid level, 1.325 is a mid level. So these are the mid levels I have drawn out, and these are the levels I follow. Okay, now you've marked out your mid levels. You know that, okay, if price doesn't stop at a key level, it will stop at a mid level. What do? You go down now to your 4 hours to look at the immediate structure, what's happening on the immediate short term. Okay, now you've noticed that it is creating higher highs and higher lows, and you realize something. I want us to start here. Okay, so price was giving you a downtrend from this point. Okay, so let's take it from here. Price was giving us a downtrend. You can call it internal, external, whatever. So we're having this trend to the downside where we're creating lower lows and lower highs. Okay, and you see this is the last lower high that was created, and price gave us this low. And now if you continue coming, what happened? We eventually had a change of character here, right? We had a change of character at this point where price took out the last 4 hours high. So once this happened, what do? You go down to the 1 hour time frame, because it is from that time frame we start looking for our entry confirmations. Okay, so we go down to the 1 hour and make sure we spot out our change of character. Okay, network is not really the best, but we gotta do this. Good. So this is the 1 hour time frame. You see, we had the overall change of character. On the 1 hour, this is the measure. So we follow the measure instead of just the minor. And now, what do? It's simple, right? It is simple. Price came all the way down. This is where you add confluences. So if you have not watched the video about how to use your Fibonacci, I have a video here on this channel telling you. I'll drop the link to all the videos I'm talking about in the comment section, so you can go back and watch a whole playlist to where we are right now. Okay, so you use your Fibonacci. You take your Fib from this low, right, to this high, and you realize that what happened? Price tapped on your 50% retracement level. This is 50%, right? So I'll delete the Fib so you can look at the line. I marked it on the 50%. You see, price tapped on our 50% retracement level. Let me make the line clean and change the color to green. Okay, so you see, price tapped on our 50% retracement level, and what happened? We start watching to see the confirmation I taught you guys about, which is an engulfing candle. Very simple. Okay, an engulfing candlestick. and eventually we had an engulfing here. This is an engulfing candlestick. And now, how do you incorporate the key level or mid level into this strategy? It is very simple. You watch, this is a mid level 1.133,500. Once an hourly or 30 minutes candle closes above this level, that's a buy confirmation. And what happened? This candlestick closed above the level. Okay, so you get in with a long from that point, and your stop loss should be few pips below the structure that led to that engulfing candlestick. Simple. That's how you get it. And you target a simple 1:2. Okay, and that's it. You got a 1:2 at this point. Simple. That's it. You get. Now we can realize that price gave us this move and came down. Now if you go down to the 30 minutes time frame, you realize that this is a whole structure. Okay, because price moved from this point to this point. Okay, and then gave us this pullback, and you see the pullback came all the way to between 50 and 61.8. but now, do we have a key level here? No. So what do? We keep watching until we have a key level. And now from our key level to key level, this is it. Okay, so you move from this key, from here, this low, to this key level, and you realize that this is the 50% retracement level. I don't want to go down to the lower time frame because we'll start pushing all the way down. But if you go down to the lower time frame, you realize that you had your confirmation within this area for you to have your buy. And once you have your buy around this key level, there are two things involved. You can put a pending order on a key level and have a 20 pip stop loss, saying that, okay, when price gets to this point, I'm risking 20 pips. I've taught most of my students how to trade this, and we target 1:2.5, which is 50 pips, or you target 1:5, which is 100 pips from key level to key level. 50 pips is from key level to mid level. That's how simple the key level strategy works. Okay, now let's keep looking. And when price got to this point, okay, these are two setups. I decided not to take this small one because I don't want to go down to the lower time frame. But if I was in front of the chart, I will notice that one. Now, this is the next point where you use your Fibonacci from this low to this high. Okay, so you take your Fib from this low to this high. You see, the 1.34500 is a mid level, and it falls around 50% retracement. And look at what happened. We had an engulfing candlestick. This is a confirmation. If I was in front of the chart, I would not even hesitate. This is a trade I would have taken. Okay, and what happened? It went straight to your stop loss. Okay, it went straight to our stop loss, and that's part of trading. You must not hit CP every time. Okay, now once you hit stop loss, what do? You accept the reality and you keep watching, and you see that this is still the main low, and this was a simple low. And what happened? Eventually you had a clean engulfing candlestick on the 1 hour time frame at this point. And what do? You get another entry. Okay, you get another entry, and do what? Place few pips below the structure that gave us the engulfing candlestick. And what do you target? The next key level, or you target, because here you realize that this is a Fib level, so we target the Fib extension level. Okay, from this low to this high. Then we can target this 27 extension or 61.8 extension. That's 1:7. Okay, and then we extend it. So it all depends on how you are willing to hold your trade. Okay, and eventually price came back. Price gave us some profits. Okay, it gave us about 1:2, came back to our entry, and we kept holding. Okay, you can keep holding, hold until you hit your full take profits. And eventually, let me just mark out the take profit level so we don't need to draw it all through. So you mark this level, and eventually price came up to your level and you made your profit. Okay, let's delete this and continue following the price action, because I really want you to understand what we are talking about. Okay, and here price gave us this low and gave us that take profit. Okay, but before that take profit, what happened? Price gave us another break of structure here, came down, and you see most of the time price was playing around the key level, but it did not give us a confirmation. Why? This is the low that led to this break of structure. Okay, from this point to here, you see that this one wasn't a break of structure, so we still respect. And now we say, okay, we can take this one or this one to be our next secure or protected low, because if price takes out this low, it is a protected low. It means you are wrong. And now what happened? Eventually, let me take our Fibonacci from the new low. We can use this low or this low, because this is the last low that even led to the break of structure. So we take this low to this high. Okay, and if price comes down 50%, we start looking for our engulfing candlestick. And what happened? Price came down 61.8%. And what happened? Did we get an engulfing? Let me open it. Yes, this is an engulfing candlestick. Okay, so you incorporate your FIB to your key levels and your mid levels with the engulfing candlestick, because the engulfing candlestick now acts like an entry confirmation. Okay, it acts like an entry confirmation. Then yes, so this is it. You enter from this key level, from this engulfing candlestick. Where is your stop loss? Few pips below the engulfing candlestick. You don't need to go too far. Okay, few pips below the engulfing, below the structure that led to the engulfing. Okay, and that's just 20 pips. And then you can target the next key level or mid level, or you target a 1:2. Okay, this one is a 1:2. You can just target a 1:2 and you make your profits. Okay, and this is the high. Once this high is taken, you mark it out, and then you know this is your next level. You are waiting for a pullback to be able to trade. So you take your FIB. The comment section is open, so you can always ask your questions in the comment section so that I can make a video for you to clarify you on how to go about it. Okay, good. So if you see price came down here, did not give you 50%, so that was not a trade. So we consider all of this as one move. Okay, and then you see that price eventually came to our 50% retracement level. But did we have an engulfing here? No, no engulfing. Let me delete it so you can see. No engulfing here. Okay, what we had was an internal change of character. You see, price gave us, let me show you what I mean by internal change of character. So price was creating an internal structure, creating lower highs, lower low, lower high, lower low, gave us this high, gave us this low, and finally breakthrough. And now what do? You wait for price to pull back into that area, and then you get an entry from somewhere around here, and that's how we would have caught this move. Okay, so you get it here. You can either enter here or here, and then where's your stop loss? Few pips below this low, and then you target the next key level, or you target a 1:2. It depends on you, and that's how you make money in the financial market. And now look at the key levels. Whenever a candlestick closes above a key level, what happens? It targets the next key level, the next mid level. That's just how it works most of the time. I have a whole video on that, breaking it down. So I just wanted to give you this simple strategy that as a beginner you can use to start your trading journey. And if this video has helped you, why not subscribe to the channel? And if you want to join my free community, the links are in the description, where I share my free signals. I share everything I do with you guys. Love you all. Looking forward to see you on the next video. Ciao.